What credit score is needed to buy a house? Your credit history is important in qualifying for a mortgage to buy a house. That credit history and your credit habits are summarized by your credit score, so that number is critical when you are looking to buy a home. In general, you will need a credit score of at least 500 to 720 to buy a house, depending on the type of mortgage you seek and the amount you are looking to borrow. It's because different types of loans have different minimum credit score requirements to qualify. Let's look at each of the different types of loans, keeping in mind that each of the credit scores shown is a minimum required to qualify for that type of loan. Minimum credit scores to get a mortgage. Conventional mortgage, 620. FHA loan with at least a 10% down payment, 500. FHA loan with at least a 3.5% down payment, 580. VA loan, 600 to 640. USDA loan, 640. Jumbo loan, 740. Need to improve your FICO score. What goes into your credit score calculation? FICO stands for the Fair Isaac Corporation. FICO calculates credit scores based on information collected by credit reporting agencies. You potentially have dozens of different credit scores. FICO score is the most frequently used scores. It is based on the following factors. Your payment history, 35% of your score. Paying your bills on time is important. Be aware that every time you pay a bill late that gets reported to FICO, that puts a black mark on your credit that can stay there for up to 7.5 years. Amount owed, 30% of your score. This portion of your score is not looking so much at how much you owe, but how much you owe in relation to how much you could borrow. Think of this in relation to your credit limit on a credit card. If you have a $5,000 credit limit but have a balance of $1,500, the credit reporting agencies view this as far better than having a $2,000 credit limit with that same balance of $1,500. In both cases, you owe the same amount, but the percentage of your available credit you have used is significantly higher on the account with the $2,000 credit limit. This percentage is called your credit utilization, and it's good to have it be low. Ideally, you'll never let the amount you owe go above 30% of your credit limit on any account and in total. Length of credit history, 15% of your score. Having a longer credit history will give you a higher FICO score. FICO looks at the age of your oldest credit account, the average age of all your credit, and the average age of all your accounts. Credit mix, 10% of your score. Banking experience has shown that those who have a mixture of different types of credit accounts like credit cards, finance company accounts, store accounts, and mortgages tend to be less likely to default on their loans, so give extra credit to accounts that have several different types of credit accounts. New credit accounts, 10% of your score. Bankers have also found that people who are struggling financially tend to apply for more credit accounts, oftentimes several in a short period of time. This is even more of a negative signal if you have a limited credit history. FICO reduces your score when they see that happen. As per us at Keith Go Lending Team, the lower your credit score, the fewer options you have in life. It's important to learn about the basics of credit, work to improve your credit score, and adhere to solid financial habits to preserve and build it over time.